All right, you are watching Trading Day. We are watching the commodity sector give back a lot of the gains that we've seen recently. Oil, for example, at its lowest level since February, but I mentioned this materials, particularly the base metals, under pressure right now. Let's bring in Mark Sebastian, founder of Option Pit and CIO of Karman Line, for a look at what's going on. Mark, is this just good old-fashioned, global growth scares rearing its head again?
Yeah, I mean, I don't know where we would be if technology wasn't holding up U.S. markets. You can actually get a better idea of what's really going on in the market by looking at the Dow Jones Industrial Average than the S&P 500, the NASDAQ 100. In the last 20 days, the Dow is down almost 3%, while the S&P is dead flat. And the reason for that dead flatness has to do entirely with NVIDIA really picking up a lot of steam. NVIDIA is now a bigger component of the S&P 500 than Apple. It's the second biggest company in the United States. Apple is actually had a pretty decent last 20 days. But those two names look relatively strong. The rest of those like giant names have been pretty flat. But without those two names, kind of holding up the market, notably NVIDIA, it's added about 1.5% to the S&P. We would be probably looking at talking about how much stress the market is in right now.
I mean, you said holding up the market. Maybe they're siphoning off the market, taking all the funds from everywhere else. I mean, that seemed to be what happened after NVIDIA's quarter.
Yeah, I mean, I literally called NVIDIA a vampire in that it sucked the life out of the rest of the market. I got to tell you, last time you and I talked, I thought I got caught really flat-footed and surprised by what happened. I was expecting those powerful, really good earnings out of NVIDIA to kind of get the AI narrative going again, get stocks like AMD and AI and IBM to start catching a little bit of a bid. And that has really failed to materialize. It's really just been NVIDIA rallying and rallying, Apple from their buyback moving a little bit higher, and everything else kind of stalling out. And the materials, which looked great about 2 weeks ago, energy, which looked great about 2 weeks ago, they've really taken the brunt of this.
I mean, it seems like we're all building to a correction, to some sort of pullback, Mark. Is that your assessment?
Well, the way that happens is we need NVIDIA stops going up. It doesn't even have to drop, but imagine a scenario where NVIDIA stops going up, and then you go and look at interest rates. And that's really what this story has been about, is interest rates. If we start seeing some real weakness in the US 10-year and then in the long bond, now you have a recipe where the market could actually really face some pressure. And we could see the other side of 5,000 in the S&P pretty quickly. We could see the Dow Jones make a run back at like 35,000. So that's kind of the build that we have. But until we see that big move in interest rates, we've seen money really more move around than leave. It's left materials, energy, most of tech, and rolled into Apple and NVIDIA. Money last week was coming out a lot of tech, but it was rolling into names like Triple M and J&J. We need that interest rate scare in order to, I think, really get money to leave the market. And we need relative weakness out of NVIDIA, which is kind of turning into the hedge fund hotel that Apple was, say, 3 years ago.
Is that dangerous? Because it seems like it's underpinned by fundamentals, but to your point, if there is a rush for the exits, maybe fundamentals don't support right away.
Well, I mean, right now there's growth in data centers and growth in all over the AI space. Now, what you have to worry about is the economy softens up, interest rates continue to soften up, the consumer disappears, and all of a sudden, all of that AI investment isn't making the downstream customer that is buying all these chips, using all these data centers any money, and now you get, that is your recipe for NVIDIA pulling back pretty quickly. Think like the last time NVIDIA had a big boom like this, it was Bitcoin. Well, Bitcoin starts to pull back, the miners stop mining as much, and NVIDIA takes a dive. That same kind of super cycle scenario lines up if the downstream AI doesn't play out and NVIDIA doesn't have customers to sell their chips to anymore. And then let's not forget that AMD and Intel are really trying to catch up. Intel out with a chip today. You look at the relative value of Intel, AMD, and NVIDIA, and you say, okay, if NVIDIA is fair value, AMD is way overpriced, and Intel, bad management aside, is probably the cheapest play on the block.
I mean, I think we really should underline this point. Right now, a lot of these AI stocks are benefiting from an investment cycle, and NVIDIA is part of that investment cycle. If you want to invest in AI, you got to buy chips from NVIDIA. But the return, at some point, investors are going to expect a return from some of these companies that have been investing. I mean, what do you do about that? Because that seems like we're even buying utilities for AI. We're buying Dell computers for its AI servers. It's just, It's really broadening out. It seems like a risk is being sown into the market.
Well, you look at what happened with Dell on earnings, right? Their margins were terrible on their data centers, and they absolutely smacked that thing. This does smell a little 99, 2000. People were investing in new computers for Y2K. Well, now we're investing in new computers for AI. Well, after kind of that investment cycle ended, there were several companies that were huge winners, right? Amazon, Google, Microsoft ended up being a big winner in that, but there were a lot of companies that were not winners. Cisco hasn't done anything. Remember networking? Yeah, Cisco hasn't done anything in 30 years? So you have to look hard and say, okay, who are the winners and losers here? Because the easy money of just buy AI and watch it go up, that is gone. All right, there's no easy money to be made. I think the easy money in NVIDIA is probably gone as well. That doesn't mean it's a bad long-term hold, but to expect another 100% this year out of that stock, or even another 50% or 20% at this point, probably seems a little much.
So what do you like?
What do I like? That's a good question. I still look long-term at a name like 3M. Yes, it's had a little bit of a bounce, but just to get back to kind of where it was pre all this lawsuit mess, you're looking at 30% upside. J&J got smoked on earnings. There's some opportunity there. We've actually seen some retailers start to do really well. A&F, even Gap stores. I like Walmart. You look at what Walmart's doing with Walmart Plus, the experience there relative to like an Amazon is really interesting. Now they don't have the server technology, but when you look at the retail side, Walmart has really done a good job of catching up to Amazon. And then on the short side, I think Target is gonna go the way of the dodo long term.
What?
They have I mean, they're going to maybe not out of business.
That wasn't me. That was suburban moms everywhere.
They look a lot like Macy's. They look a lot like, Sears with their lack of investment on the site side. The fact that they don't have like a Target premium or anything like that is kind of shocking at this point. Yes, the stores are nicer. It's a better experience being in store than being at Walmart, but the lack of investment on their online, which is becoming a bigger and bigger piece, is just going to continue to hurt them and hurt them and hurt them. And so it's had a little bit of a run, but that is an area where I would be getting out of Dodge. And Apple, I still think I would never short it, but I think if I was long it, I would be looking seriously at getting my money out of it, because well, you know how I feel. I think Tim Cook needs to go. I think borrowing to buy $110 billion of your own stock is a terrible idea, and the lack of innovation there tells me that this is turning into a Comcast or a Verizon, which turns into dead money.
I mean, listen, let me interject with that. Siri, I just think about my phone, how addicted I am to it. Then you're going to give Siri a brain with artificial intelligence. I'm going to be talking to her or him all the time. It's going to further entrench. There's going to be all kinds of apps that can be built on top of that. I see, another push on the devices and on the services side. And so what, you don't think that the AI thing is going to save them, or they're going to do it well?
The services can't make up for the phone. the Dragon phone, the lack of innovation of the phone, the fact that this is really all they can do. This will get replaced just like the cordless phone got replaced by this, and the landline got replaced by the cordless phone. 20 years ago, 25 years ago, can you imagine no one having a landline? I mean, I'm a little older than you, Amar, but if you'd asked 20-year-old Mark Sebastian if we were going to not have landline phones, I would have thought that was absolutely ridiculous. There will be something that will replace this, and their lack of innovation and lack of investment is going to cost them long term.
All right, Mark.